I'm Lynette Zang, founder and CEO of Zang Enterprises. And today I am so happy to have a very dear old friend of mine, Egon Von Greyerz, who is a world-renowned authority on wealth management and how to preserve your wealth. He's coming all the way to us from Switzerland, and he just got off of a trip, so I really appreciate this effort. Egon, thank you so much for coming today.
I'm so glad to see you after some time now. So, and there was some things. Yeah, many have changed. You should have come to Switzerland once, but
I did not make it to Switzerland, but that doesn't mean that that's not something that is likely to happen in the near future.
Okay.
And I view what we're doing right now, and I view our relationship as building community.
Yeah, absolutely.
Because
we are the old pros.
We are the old pros, and we have to help these younger people. And actually, that leads me to a question that I had for you, because I know how I feel about this. But we're seeing almost a global run. I wouldn't call it a run yet, but look what's happening in South Korea with younger people buying physical gold at convenience stores and out of vending machines. I mean, this to me is really good. The rush to China into jewelry, gold, because, and in the U.S., Costco, Walmart, Amazon, selling gold and selling silver. What do you make of all that, Egon?
Well, of course, there is retail buying taking place, but when we look at the figures, it hasn't really started in quantity yet. And we're seeing that too, and the Swiss refiners seeing that too, that this is not yet, interestingly enough, gold is not going up because of retail buying at all. And ETFs have been down for almost a couple of years now. Yep. So the bigger investors are not buying either. But of course, the central banks are buying and the BRIC countries are buying. And that's what really what's pushing up gold now. And that's, of course, big buyers around the globe. And that is the beginning of a trend. I'm absolutely convinced that central banks are now gradually, and that's going to take time, they're not going to rush, they're gradually moving out of dollars as their reserve assets into gold. And that's, as I said, a process that will take some time. But if they are totally going to get out of dollars, which I'm absolutely convinced they will, because they don't want their dollars to be confiscated by the US or some other bank, and therefore gold is the natural reserve currency or the reserve asset for any country. And so that is rightly happening, and that's going to be a very long move and take a long time and involve big quantities. And of course, as we both know, those quantities cannot be satisfied physically because we can only produce 3,500 tons roughly per year of new gold. So they can only be satisfied by higher prices. So that's what we're seeing now. But we are only seeing the very beginning of this move, and the real move is still to start, and that's going to take many, many years. It's not going to be a straight line and be vicious corrections, etc. Even more so in silver. But this is a secular market, which is bull market in gold, which is starting. I'm absolutely convinced.
Well, I am too, but you're talking about the central bank buying, pushing the price up, but the central banks started accumulating gold back in 2005 and went net positive, so where they were buying more than was supposedly being liquidated in 2010, and we hadn't really seen the gold price impacted much by the central bank buying because it can be easily offset by contract selling.
Yes, but you are now talking about a totally different market. I think this is sustained buying from many countries. Obviously, no Western central banks are buying gold yet. They will, but they are not. At least they're not selling. But it's the Eastern and the Southern central banks which are buying, and that's a new trend, which will last, as I said, for many years. It's absolutely certain. Then, with that and with the price move, and we haven't seen that yet. The price move has not, is not on front pages. Nobody's talking about it. I mean, retail buyers are not our clients anyway. But even the bigger, the wealthier people and institutions, they're not buying yet. So that's still to come. I mean, there will be a long, sustained gold rush even for normal investors. And then if you add to that everything that is likely to happen in the next few years, whether that's geopolitical events or whether that's bubble asset markets crashing, stocks, bonds, and property markets. So I know. I mean, I've always said that being a long-term gold investor or wealth preservation investor is the most wonderful, really, asset to be invested in, for the simple reason that you always have central banks and governments on your side, because they will consistently mismanage the economy, mismanage the currency,
good point,
print more money, and thus debase the currency, and gold will continue as it has for thousands of years to reflect that. So it's really, I don't want to call it a game, but it is a simple strategy if you want. Just we've been long gold for now 22 years, a bit over 22 years, and we went in heavily in beginning of 2002.
Right,
and
that's when I did too.
And it's up 7, 8, 9 times, depending on the currency you measure it in. And as I said, I'm not a gold bull as such, or certainly not a gold bug. I'm just someone who sees it as the best instrument to preserve your wealth. And kindly, because of if you measure it, which we shouldn't, in paper money, it would be much better to measure it in chickens or cows or something more useful,
right,
than the debasing paper currencies. But anyway, that's what people do. But we know that we just have a solid asset that maintains its value. And what's going to happen now, as I said, because of this increase in demand among institutions, among central banks, and therefore also the public, not yet, but it's coming. Of course, there will not just be wealth preservation. It will also be wealth enhancement. And therefore, I've said for years now, I stopped giving a target for gold or silver because that's totally useless.
Exactly.
Because what do we measure it in? We measure it in something that has going down by the day. So that all I can say is that I think gold and silver will reach levels that no one can imagine today, because what's going to happen in the world, plus what will happen to the currencies, of course. So it's really, I'm never worried. We had corrections. We had 22 years of ups and downs, etc. But the trend is so clear. It's a long-term uptrend.
You know what I really want to talk to you about was what's going on with the currency and the gold backing in Zimbabwe. Because I've been finding this so fascinating to watch this whole thing unfold. Not just recently, but, from their hyperinflation. And this is now their 6th iteration of the currency. So what was it, about a year and a half ago when they issued a 1-ounce gold coin? And then they did the gold back CBDC, and now a currency with partial gold backing. What do you see in what's going on in Zimbabwe?
Well, I can't say, I must admit, I haven't been there. And what I see is an experiment.
Yes.
That is unlikely to actually last. I want to be honest, because, countries with the history of always overspending are not going to change it overnight. It's like, gold standards, they come and go. And here, this is a new Zimbabwe temporary gold standard. And I think with the problems that we will see around the world, including Zimbabwe, they will return to money printing again, I'm sure. I don't want to be a pessimist, but history is a very good indicator of what's going to happen. And I would say that Argentina with Milei has a better chance of turning around their economy. At least he understands the whole concept of money and what destroys money. Sadly, in the end, I think even the political system there is going to destroy him, because in the end, the country is probably going to be difficult to turn around, especially if the whole world will have problems. So maybe it won't be a long-lasting turnaround, but it certainly is fantastic anyway what he's doing so far. I said Zimbabwe. I don't want to say that I can't take it seriously. I think it's fantastic they're doing it, but I'm just skeptical that it will last for any longer period.
Well, so far the population, yes, the wealthy they did great with those gold coins, but not so great with the CBDC. The population didn't accept it, and they're trying to force the new currency down their throats, but they're doing what every country does when the public loses all confidence, which is bringing gold back into the system.
Yeah.
I think the problem is it's non-convertible. So how can you really trust that gold is there?
No, you can't. And we, as we all know, when governments come under pressure, they start cheating.
Yes, they do.
And that's why I said I don't think it's going to last that long, because Zimbabwe is not a wealthy country. Sure, they have a lot of natural resources, but it's not. It takes a long time to change from a banana republic to a structured economy. And let's face it, not a single country in the West has succeeded with that either. On the contrary, they're just getting worse. So if Zimbabwe is the only country in the world that's going to succeed with the gold standard, I'll be very, very surprised. I must say.
I think I mean, I'm going to agree with you because the public is skeptical about the new currency, which is supposed to be, it looks like they designed it after the SDR, the IMF's SDR, as a basket of currency. But it's pretty opaque. But that's what governments always do. When all confidence in the system is lost, then they pull out the gold card. It's just that, will the public trust those that are currently in power and the system that's gotten them into this mess? Will that do it right away? Because that's what happens every time.
Yes, what people have now forgotten about is that if you have a gold standard, that means it's the same thing as having a balanced budget. It's the same thing as having a balanced trade account, and you are not allowed to overspend, because if you do, your gold flows out either to another nation or flows out of the government's coffers. And I just don't think people can change that quickly. So especially since we are now in a world which is going the other way. Debt is increasing at a frightening rate. And if we're just looking at the United States, it's in the beginning yet. You're going to have trillions and trillions in deficits. And just you wait until that bond market crashes, which it will do, in my view, or suffer dramatically. I'm convinced that interest rates are now in a long-term uptrend, which means that bonds are in a long-term downtrend. Won't be a straight line, and governments or the U.S. government or the Fed will try, of course, when they're panicking and stock market crashes, they will try to lower rates, but that will only be temporary. I think the trend is up, and it is, if you have a falling bond prices and rising rates in a period when borrowings are at record highs, that doesn't bode well for the country's economy. I think, I've been using a measure I've started in 1980, but basically saying that on average in the U.S., on every 8 years, the federal deficit doubles, and therefore the debt doubles every 8 years, and that takes us to And also, I've been showing what happens to exponential moves. There are simple examples like filling a stadium, whether it's a football stadium or soccer stadium, whatever, with water. You start with 1 drop, and then a minute later you double it to 2, and then a minute later 4, 8, etc. And then you ask, how long does it take for this? In 45 minutes for the stadium to fill? And I'll tell you, it takes 52 minutes to fill a whole stadium. 52 minutes.
That's not very long.
But in 45 minutes, it's only after 45 minutes, 7 minutes before the end, it's only 7% full.
Wow.
And that's what exponential moves are all about. And that's what we're seeing in debt now. That's what we saw, for example, in Germany in the Weimar Republic. If you look at what's happening to inflation or to gold in the Weimar Republic, you see that it was at the last few months of 23 that it really went straight up. So it was gradually, as Hemingway says, gradually and then suddenly. And that's what happens in exponential moves. We've seen that in global population in the last 150 years, going slowly up to 1 billion, and now all of a sudden almost up to 8 billion in the last 150 years. And we're seeing it in debt now. So we will have an explosion in debt. It's inevitable because the US, it's the only way they can get out of this is to print more money. Sure, there is an alternative if they actually have the gold, and if they actually can prove that they have the gold, is to revalue the gold. If you revalue the gold by 10 times or 15 times, that's a way of dealing with the debt, at least for a while. It won't get rid of new deficits, but it gets rid of the existing debt. So that's a possibility that they might try, but the world will demand that they prove that the 8,100 tons of gold is still there. We shall see.
We shall see. But, let's talk about the rising debt, because, of course, everybody's talking in this country. And actually, you're in Switzerland. So where since 2008, we've been watching the synchronized central bank move. Well, it was Switzerland that kind of broke that move in 2015 with the Swiss surprise, which was really a major event. But Switzerland just recently lowered rates when... Yeah. So can you speak to that?
Well, I've lived in a few countries, Sweden, England especially, and Switzerland. And of all the countries, Switzerland is by far the best managed country, economically and also politically. Therefore, Switzerland, I will take an example. When I started working in Switzerland in 1969, a long time ago, I might add, the Swiss franc to the dollar was 4.30. $1 for Swiss franc 30. Now $1 is 90 Swiss cents. So that's down by more than 80%. The mighty dollar is down by 80% against the Swiss franc. And I moved to the UK later when the Swiss franc to the pound was 10, £1, 10 Swiss franc. And now one pound is about 1 Swiss franc 10. So from 10 to 110. So, and that shows you that this is a well-managed economy where they actually keep within their means. They're not, the debt is not going up. They are very careful in not making deficit year after year. So it's just a soundly managed economy. And there's a coalition government where they take joint decisions for the people, for the country. Very often when you have these referendums where the people can vote if they sign a list, 100,000 signatures, they can vote on anything. But if the referendum is about something that just benefits one group or even benefits the masses, but if it's not right for the country, they vote no, they vote against it. So it is actually a very sensible people, the Swiss, or we Swiss, and that shows in the economy. it's if you're an American comes here, obviously with that, what's happened to the currency, Swiss currency, or most people who come here find that it's very expensive because people earn good money here because the currency has obviously appreciated. So yes, Switzerland, the many people, I remember in the 70s, many people borrowed Swiss francs because you borrowed it for 1% or something when rates in Japan or in England or America were 10%, and of course they lost their shirt because the Swiss franc appreciated continuously. So that was a very stupid currency game to play.
Well, yeah.
It is a very well managed economy. Now they have some problems. The central bank is a hedge fund with a balance sheet which is as big as GDP. The banking system is about 5-6 times GDP, which is bigger than most Western countries, all Western countries, etc. And the national bank mainly has got massive currency positions and some stocks, U.S. stocks also, especially tech stocks, etc., which is not what a central bank should have. But that wasn't from the beginning. When I used to work here when I was younger, the central bank was a very, very prudent bank, and so were Swiss banks. But now Swiss banking has become hedge funds like most other banks. Still, they managed to hold the country down, but those positions holding, shorting the Swiss francs and buying the euro because that's their biggest trading partner is a dangerous game.
Well, we saw that in 2015, didn't we? With the Swiss surprise.
Yeah.
And
no.
I think also, back in the 70s, Switzerland was the last country to go off the gold standard, wasn't it?
Yeah, I think so. Yeah. Yes. No, it's, people have always saved in gold here, and still, it's not an uncommon gift for somebody getting married, etc., to give gold. But I will admit that before every bank had in the window gold coins, and they don't anymore because obviously the gold buying isn't as big as it was here. But we still have our little coin called a friendly Swiss gold coin, which is quite common as a gift still among people to save in. Yeah, we are older, you and I, and we can say every now and then that things aren't what they used to be. But relatively, still Switzerland. I will still stress that Switzerland, I think, is one of the best countries in the world, and very safe to live in, and a very good standard here. And it's not seeing at all the same migration problem. Obviously there are a lot of foreigners working here, but they all have a job. A lot of them are European, EU, etc. But it's not mass unemployment, and it's not people in the streets without jobs. So from that point of view, it is a very good country to live in.
But you brought up a really great point, and that's the central banks as hedge funds right now. And people don't realize that. But could you speak to that a little bit more? Because I think that is a really important point for everybody to understand.
Yes, of course. So I mentioned Switzerland, which in spite of that is soundly managed. The economy is soundly managed, and the deficits are under control and very low. Often they have a balanced budget. But you take what's happened, as we've seen, you take central bank balance sheets. First in the West, you take the EU, you take the Fed, and you take the Bank of Japan, and even now today China. So there you have got in this century, you got from virtually very low borrowing to zero borrowing to tens of trillions or hundreds of trillions if you want. So that's of course what we've seen in this, especially in the last 20 years, but even since 1971 when we went off, or Nixon took the world off the gold standard. the money creation and the debt creation is just unprecedented in history. And therefore, it has to end badly. There is absolutely no chance. You cannot print money that has zero value and then count everything around as well as buildings or stocks or bonds, as so valuable and everyone is so rich. Sadly, that illusion will die quickly at some point, and that can be tomorrow or it can take another 10 years. We don't know.
Right.
I think both you and I thought it would happen faster than it has, and we thought maybe 2008 could have been it, but they skillfully managed to put the problem off. But I think it's going to be harder this time, and we need to hold on to our gold.
That's a fact, but there are a couple things in there, with the central banks acting like a hedge fund. Like I was there in 1987 on Black Monday, and then after that they came out with the plunge protection team. So are all of their stock and bond buying, that's, in my opinion, and I want you, if you disagree with me, I want you to say it anyway, but it's more about managing people's expectations and managing the stock and bond market so that it hides what's really happening, right? In the U.S., the S&P made another new high yesterday. Woohoo, right? Yeah. But what does that really mean? Because you also said something about the Swiss franc appreciating, but weren't you really referring to that against another currency, so fiat to fiat?
Yes, you're absolutely right. The race to the bottom is inevitable of all the currencies, and there's no prize for coming first to the bottom. And you haven't done that well if you only are second or third to the bottom.
Right.
But they're all in the race, and they will all go to zero at some point. And of course, I often, like you do, try to make the point that since 71, every single currency is down 97 to 99% in real terms, which we measure as gold. So the last 1 to 3% are going to happen. And of course, but that 1 to 3% is 100% from here, not just 1 or 3% from here. So that's another collapse of the system, and that's inevitable. The people believe that what we're seeing around us is for real, that all of these values are for real. And if you go in a financial system from virtually 70 years ago, virtually no debts, to now, well, you have the official debt of the world is, let's say, 330 trillion or so. But the derivatives, and nobody knows what the derivatives are. The Bank of International Settlement here in Switzerland, in Basel, says it's about 600 trillion. I think it's substantially higher. I mean, it was double that about 10 years ago.
Right.
And then they just halved it by taking out one side, which is really just playing with fire. But I think with the shadow banking system, and all of these transactions that are not measurable, I think we could be 1, 2, 3 quadrillion in derivatives. And that's a form, a lot of these derivatives is a form of financing also, must remember that the derivatives are used for financing, for creating loans.
Exactly.
It's not just hedging. You don't need all of that for hedging, but it's just creating synthetic loans and synthetic instruments. At some point in the next few years, whatever time it will take, that will blow up too. I'm absolutely convinced. So you're talking about a debt situation which is much greater than the 300 trillion official figure. And therefore, when that happens, when one side of the balance sheet implodes, so will the other side. It means that all the asset values that were supported by this credit will also implode. That's what no one understands, because, as you say, market can only go up, and whatever economic news, it always goes up. So it's been it's been a wonderful time for investors, and you needed no skill whatsoever. You might as well be blindfolded and folded and throw a dart on a newspaper with share prices, and whatever you bought, it went up. So it's been a wonderful time. Every investor thinks they're a genius. So they also did at the end of the 90s.
Mm-hmm.
Everyone was a tech expert. Everyone you talk to, whether he was a petrol pump or a gas pump attendant, or whether it's a salesperson, whatever. Everybody was investing. Everybody was an expert on it. I don't know what told my story that I had an old aunt in America, and in the 90s, and she's dead now. God bless her. And she also, like everybody else, she was looking at the ticker tape, and she was buying also. And my mother, who lived in Sweden, told me how well her sister was doing. And she's now doing so well, so she's taught her cleaning lady also to invest in shares. And that eureka, that was the sign for me. This is very near the end now. That it's like the shoe shine boy, basically. So that's what we've seen. Anybody could buy in a bull market. Everybody's an expert in a bull market. Now, at least Nasdaq went down 80%, and many companies disappeared. But the rest now has all gone back up again. So we're going to see the same crash, and it'll be bigger this time, probably. I mean, I could see all markets crashing, and I don't want to be sensational, and it's really, I mean, I don't really like making forecasts, but in relation to gold, I see stock markets going down by 95% or so. And bond markets and property markets, and I'm not a gold bull at all.
Well, that's just a repetition of history. That's what you're talking about.
Yes, exactly.
And and staying on.
But don't you know it's different today? Because we live today is different. That's what everybody says, of course. Sorry, I interrupted you.
Oh, no, you are absolutely right. Everybody always says this time it's different, but it frankly never is. But looking at the derivatives and the shift since 2008, because that's when I'm convinced that the system really died and was put on life support till they could create this next iteration for us to move into. But before we go there, I just want to stay on the stock markets for a minute, because when you look at a country like Venezuela, who in 2012, 13, 14 had the best performing stock markets in the world, but their currency was hyperinflating into oblivion. So do you think that when this next stock market crash appears, I mean, it seems to me like central bankers are just looking for an excuse to drop all those rates again and inspire more borrowing, more spending, and to reflate. The hyperinflation would also do that, wouldn't it? Or what do you think about what they're doing to prop up these markets, and what they would do if the market were to begin to implode? I guess that's the question.
We both know, Lynette, that that's the only tool they have.
Right.
And I'm of the very firm opinion that central banks should not exist. They harm markets. They don't help markets. They manipulate markets to actually destroy the natural forces of supply and demand.
Yep.
That would keep both the tops and the bottoms at much more modest levels than the extreme ones we're seeing now. So central banks are obviously it was created in order to control the marketplace, and so the bankers have benefited greatly from this, but now, in the short term, when they have crisis, and we are soon going to get the next one, and as you rightly said, the only tool that they have is to lower interest rates and then also to print money. And of course, they will do both. But I am quite convinced that almost a bit of a 40-year trend in interest rates that from 1980 to 2021 bottom. That has come to an end, and I think the trend is now up. But as I said, within that, there will, of course will be counter moves, and as you say, there will be when the panic comes, they will lower rates again, but it's not going to last. And that's why the next phase here will be make it so much more difficult for them to manage the situation, because I've said that for quite a few years, central banks will lose control of interest rates.
Yes, I agree.
The market will take care of that control by the sheer fact that the market is going to dump bonds, because bonds are going down in value by the day, just by the currency declining. And then they will also continue to decline because interest rates go up, even if they temporarily can go down a little bit. So we had discussed before, I mean, government bonds is the worst investment in the world today. I cannot understand how anyone can buy a government bond, because, as I said, you will lose on the currency dramatically. And you will lose on the fact that the bonds are also going to crash over a very long 20, 30-year period at least. And therefore, compared to today, in 20 years' time or 30 years' time, they will be worthless, totally worthless. So you can do like people did in the past, put it on in your toilet as wallpaper, government bonds. So that there's nothing they can do. They will short-term lower rates. The market will just sell off again. The bond market will sell off, and rates will go up quickly again. And the financing requirement of governments, whether you take the U.S. government or the EU governments, or you take the Japanese government, which is a disaster, of course, as we all know, and even China will have its problems. But the difference with China is that most of it is domestic. They're not dependent on the global financial system. So they will sort that out internally, China, and it's not going to affect the rest of the world so much. It will affect obviously business in China and trading and global trade, etc. But they won't go bust in the same way, in my view, that the rest of the world will do.
Well, do you think that will have an impact on the BRICS? Because China is a big key entity in the BRICS nation. And would you say the same thing is true for the other countries, or is that how the power shifts, or what are you thinking with regard to that?
Well, what China's done, of course, in the last 50, 70 years or so, I mean, it's a miracle. They managed to build up an economy that is feeding their population of 1.2 or 1.3 trillion, whatever they have, and it's billion. Sorry,
there's a lot.
It's a lot of people. Of course, India has overtaken them now, but nevertheless, it's a miracle what they've done, and they built up an industry at the same time. And of course, been a great trading partner for the rest of the world. So obviously, the coming problems will mean that they're also, plus, of course, they have the demographic situation, which means that their production will come down automatically by not having enough workers to produce all these goods. So they will suffer too. But I don't think there will be, that will be temporary. They are very well run as a country, in my view, and with strong centralized control, but still have a lot of free enterprise. And I think they will come back strongly again. I think what's happening in China, this is a long-term move. And of course, whilst the West is in decline, there's no question about it. Now, some people think that the U.S. now is moving manufacturing back to the U.S. and the costs in the U.S. are not much higher than in China, etc. And I think there will be moves back with manufacturing. I mean, U.S. has also been an economic miracle, but that will take a little bit longer to turn around the US because first you have to unravel this debt situation and the implosion of all the assets we're talking about, the debt in particular, but also stock markets, etc., will mean that the US will have an extended period of economic downturn and poverty, etc., and the US economy will suffer greatly. Much more than the Chinese economy might well be. Chinese economy can create a strong domestic demand because they don't have the same, the people don't have the same level of debt as the government has, as companies have. So I think therefore China will have a much better chance to come out of the next downturn stronger than most other countries.
Maybe, but when you talk about the Chinese miracle and you talk about the U.S. miracle, isn't this what created that miracle? Right? Is that what created absolutely. Those miracles? And actually, China gives me a lot of hope because for the first time in, as you said, I mean, they had a 40-year miracle where they were boosting everybody on debt and household wealth, et cetera, all built on debt. But I think it doesn't matter where you're looking. That debt mountain has to be paid off with currencies that have no value. And that's really where gold comes in, because as you rightly said before, about all they have to do is revalue gold. That when people say, I want your thoughts on this, and I'm not going to keep you too much longer, but how do you feel about gold's revaluation accounts? I mean, they have that globally. Can they just do that and fix all the debt problems?
Well, number one, yes, in theory. But if they do, it's only a temporary fix, of course. You have to remember that. It doesn't actually change the economy as such. It doesn't change, the deficits that they're still running. It doesn't make the country better run by just taking in a bit of profit on the balance sheet. So in itself, it doesn't improve the economy. Until the countries have to suffer in order to actually get a fresh start again. Mm-hmm. That's why, my reset is a disorderly reset, not an orderly one. There's a disorderly one. The debt has to implode, and it will, whether they try with gold or not. And of course, a lot of Western countries don't have the gold. I'm quite convinced whatever the US has, we will maybe never find out. They will obviously lie and refuse to ever have it audited properly. And you take a central bank in Europe. I mean, let's take Bank of England, because the LBMA system keeps a lot of its gold in the UK. Mm-hmm. And so the Eastern buyers are now increasing dramatically with central banks and the BRIC countries also, etc. And a lot of that gold is coming from, because the amount, the 3,500 tons that is produced every year is being consumed automatically, and is not enough to satisfy the increase in central bank now the demand. So what happens is, and it's been happening for quite a few years, that a central bank lends its gold to a bullion bank, which is a normal commercial bank. And the bullion bank sends its 400-ounce bars to Switzerland to have it broken down into kilobars, which is what China and India wants. And then the gold is sent there in kilobars. And the system then has, in the West, the bullion bank has an IOU, which is given to the central bank. So they owe the central bank X tons of gold. But when one day the central bank says, "Can I have my gold back?" The gold is in the East. It's never going to come back because it's gone forever. And that's going to happen at some point. And therefore that shortage which will arise, and that will also be combined with, as I said, a lot of the central banks, probably not having the gold. Remember, they count as physical gold any gold that they have actually lent to a bullion bank.
Yes.
That's still in their balance sheet as physical gold. They assume that all the bullion banks can deliver. So clearly, whether they will try to hide it or not, these central banks, the market will tell us that there is a massive shortage of gold, and there will be disorderly settlement of some of this. And at some point in the next X years, we will see gold making big leaps because of that. Not just $50 or $100, but bigger leaps. That will happen, and this is not something to look forward to. I tell our clients, you mustn't ask for gold to go up, because when it does, your quality of life is going to be very different.
Yes, exactly.
So you just be happy that you have your gold, and it has value when everything else goes down, or normal money goes down in value. Just be happy that you have your gold. Don't hope for it to go up, because the more gold goes up, the worse the problems in the world will be. So just think of your gold as you're having a few ounces or kilos and that's it. Don't value it every day in money, because it's meaningless. It's just your insurance, and you guarantee that you can have a life that you can survive this, hopefully, at least financially.
Very wise words. Is there anything that you're looking at right now that we haven't discussed that you think is important for the audience to know what's going on, or understand?
But I will tell you another sector that we are now seriously having discussions in is the institutional buying of gold, family offices buying of gold, wealth managers buying of gold. This is a virgin market for them. Many banks can't even hold physical gold anymore. They've got rid of the vaults of banks. So we have had a lot of discussions with people in that market, of the major wealth managers and bankers, etc. And it's very clear that now they're all starting to be very interested in actually owning gold. I think that's going to be a major shift, and it rhymes with what we said before, that there will be, I think will be a total shift in the perception of gold, and gold as a wealth preservation investment. So if that thing that we are just seeing the beginning of now, it hasn't hardly even started, but it's very, very clear that it's going to happen, and you say we are involved in those discussions. That's going to have a major change for the gold market also, because remember that normal investment managers have never bought gold, because they are only interested in buying things where they can earn commission,
right,
and not something that is safe for the clients. Now, in spite of the fact that markets are at a high, they're starting to, so even the clients are starting to ask about gold. So that is a very, very interesting trend I see starting now, that will have also major repercussions for the gold market. So I think we are at the start of something, a major trend now happening. I think that people will realize that gold, although we've been in it and seen 10 times growth but people realize that gold, you've got to hold gold for wealth preservation. You take a family office, and I can tell you, do you know that the family office market is bigger than the hedge fund market and the private equity market together?
Oh, I didn't realize that.
Sorry?
I did not realize that.
No. So the family office market is massive. And, I always said, so when I met family offices, your responsibility is to manage generational wealth. Mm-hmm. And you don't do that by buying and selling shares on a daily basis.
Right.
Or making leveraged investments. And I think that's a trend that was going to change also, especially since that is such a massive market, the family office market.
Wow.
It's very, very sophisticated also, and managed at a very, very high level. It's not, nobody can just go and knock on the door of a family office market, because it's managed by the big banks, big wealth managers, etc. So So anyway, it's an area that, yeah, very interesting, we find. And
That is
you
really
know,
interesting. I'm going to have to look into that more. But now you have a minute to let people know. Of course, all of the links are below. But how can people find you, Egon? I mean, I can't imagine that people don't know you because you are definitely world renowned.
well, I've been around. I've been around a long time. That doesn't mean that
Exactly.
they know me.
That's the advantage we have, isn't
I'm,
it?
I'm still alive. Still alive. Uh, well, you know, I have a passion for this, like you, passion for helping people.
Mm-hmm.
And we made a significant change. Recently, we changed our name from Matron Asset Management, or you know, or the trading name Gold Switzerland, to Von Greyerz, just to indicate that we are here for the long term. We are building a generational business. I have two sons-in-law in the business. We have three daughters, but they're not in the business. But their two husbands are, and they all come from
Nice.
you know, very, very good background from financial markets. So one has been with us for 12 years, and another one has started recently. So you know, I think that you know, we want to see this business continue for a long, long time, long beyond my life.
Yes.
And therefore, because yeah, as I said, this is the beginning of a very strong trend. We have the passion to help people, and the demand is going to come now in a way that we haven't seen before, and we have seen excellent growth of our business for the last
Yeah.
20, 22, 33 years. But I think we haven't even started yet in spite of that. So you know, for us, that's very exciting what's happening now, because there'll be a lot more people that we can help to protect their wealth against the destruction that's going to come for most people in coming years. Most people will come in too late to this. Most people will buy very high.
Mm-hmm.
But as I said, except for corrections, and some of them will be big, but you know, as I said before, central banks will continue to be your friend because the economy is going to be under pressure for a long time. Sometimes, of course, gold doesn't move straight, as we know. It moves in periods and cycles, and then there are periods when it moves up strongly, and there are periods when it corrects for a while. But the long-term trend, even if, you know, we start from the recent decades, so 71, you went from 35 to 850 in 1980. You went down to 250 in 99, and now we are. And then again it corrected down, and now we are at all-time highs again in paper money, of course, in measuring paper money. Nevertheless, but as I said, and I think this is just the very beginning of the move, in my view. And we haven't talked about silver, because we know that silver is extremely undervalued today. I mean, I always told investors to, if you want to sleep well at night, keep away from silver, because the moves will be extreme. You know, it'll be a roller coaster moves, and of course, it has been a very bad investment relatively to gold for quite a while now, since silver was $50 already in 1980.
Right.
I think now silver is going to go up a lot more, and for a while, you know, the gold-silver ratio is going to come down to at least 30 or maybe 15, and it's now whatever it is, 70. What is it, 75 or something?
Something like that, 70 or 80, or yeah.
Yeah, no, it's come down from that. Anyway, yeah, silver will move twice as fast for a while now, but it's the corrections will be also hair racing, so people should. In my view, if they're not just speculators who want the thrill of it, they should hold much more gold than silver.
Yes, that's what I do too. I use silver for barterability, but I like gold for wealth preservation for sure.
Yeah. So I think that's, and then I just wish that people at least try to think about now preserving their wealth. It's been sure we can't. Sorry, 76 the gold silver ratio. So, we you know, nobody can force anyone to buy anything, but if people haven't seen the need of wealth preservation, and it's only a very small sector that we are actually talking to that have realized it, and that in itself is a lot of money, but relatively, as you know, it's 0.5% of world financial markets. That's going to change. And if that goes up to 1 or 1.5%, that's more gold than can ever be supplied. And the only way again to supply that is through a higher price, not through more tons.
Yep, that's
so we are so we cater so our business is Von Greyerz.gold. But you could just vg.gold, or you can still use the URL of goldswitzerland.com, vg.gold, goldswitzerland.com. We help people with a bit more money. Our minimum in a couple of our vaults is $400,000 of Swiss franc, and in our mountain vault, the out vault, which is the biggest gold vault, private gold vault in the world, there is 5 million. So but people ask us, why can't you help us? But there are lots of other ways of buying gold. You're helping other ordinary people,
yep.
and there are people. Saving in gold is for everyone. It's not just for the rich. People must remember that. You can buy an ounce, or in silver, you can buy an ounce of silver for $30 roughly. You can buy a tenth or you can buy 100 grams of gold for, well, that's still $7,000. But you can buy an ounce for 2,000, or half an ounce, or whatever, a quarter of an ounce. It's for everyone, silver and gold. So don't believe it's just for the rich, because everyone should hold it at whatever level is right for them. And if you can't afford gold, silver is going to be a very interesting investment, at least for a while. Yep. And when it's gone up a lot, you can switch it to gold. So it's definitely for everyone. Don't buy that McDonald's or Coke. Because silver is not much more than that. So therefore, yes, it's for everyone, and people must remember that. We are not helping the smaller investor, but we know lots of people. We work with people who do, and you do, and many others do.
Yeah, and that's trying to help everybody. So we have low minimums because we're trying to democratize it, because we agree with you at Zang Enterprises. We agree with you 100%. Everybody needs to own physical gold and silver, not these ETFs or any of the other, or McDonald's. Great point.
Yeah, absolutely. Yeah, so that's very simple business like yours. We have one product or two, let's see, silver and gold, and we give excellent service, hand holding all the way through the process. And when it comes to holding gold for wealth preservation purposes outside the banking system for high net worth individuals, we are probably the biggest in the world, probably. But we take this very seriously to help people, and we really enjoy it also. It's fun to be able to help a few people, and it's absolutely necessary also.
I agree, and I'm so glad to see you. I've missed you. I'm so glad we were able to come together today. And I know you're exhausted. You've been traveling, and yet you still made the time for us. And thank you.
Well, thank you. It's always I love talking to you, and you know more about this than most people will ever know, and you explain it in such a nice way. So thanks so much for inviting me again, and I wish you all the best in your new life, in your new golden life.
It is. I'm so much happier. But this time we're going to make it, because I want to see that vault, and I'll bet you all of our viewers want to see that vault as well. And to get to talk to you in person will be, really a dream come true. Wanted to make it happen before, and I couldn't for various reasons, but now I can. Now I can make that happen.
Fantastic. It is actually on the home page of our website. There is a link that you see a picture of the vault, and there is I walk around inside there, and so you can see a minute of it. It's the location is secret, but you can still have a quick look into it. So
are you going to blindfold me so the location stays? See, that's like if I'm taking somebody up to the bug out house. The only reason to take the blindfold off would be to look at their face when they were looking over the cliff.
No, it's not as bad as this. This is a James Bond experience going through that vault. It's a real James Bond experience.
Well, we will be out there to experience that with you. And thank you so much, my friend. And I hope that everybody out there got as much enjoyment out of this interview, because this is really reuniting old friends. And I've really missed you, Egon. So thank you so much. And for all that are watching, physical silver and gold, get it done. And until next we meet, be safe out there. Bye-bye.
Thank you, Lynette. And very much enjoyed it. Thank you so much.